Hi everyone, welcome back into my YouTube channel, and in today's video I'll be sharing with you a simple explanation about how we can clearly use trendline liquidities or trendline to actually look for the best setups. As you know, in the smart money concepts or in ICT concepts, trend lines are part of liquidities. Okay, so we always expect price to sweep liquidities before a real move or before we can actually see a true move. Okay, so they are always fake zones, like they always attract or they're always acting as traps for the less informed traders. So you need to actually understand how you can use these trend lines to actually to your advantage and increase your win rate. Okay, so this video is more focused on understanding about trend lines. So I'm going to show you some few examples on how trend lines can be actually swept and how you can actually look for your entries after observing a certain kind of a liquidity sweep on the trend line. Okay, so let me show you some examples of trend lines. Okay, so as you know, a simple explanation of a trend line, you can see price moving to the upside. Like this is where we actually are trend line. But when you're moving to the downside, okay, you find some sort of trend line. So price from this kind of trend line. How are we actually trading this trend line? A lot of people actually draw this kind of, for example, your price, expect price to bounce there and continue going higher, drop, flip this line here, this trend line. So the time is either move after a trend line, are we expecting some bullish? How can you up or down? Okay, so the best way you can use this trend line is first understand about the higher time frame directional bias. Okay, so you need to understand the bias, the higher time frame directional bias. Okay, you need to have those arguments, create arguments on the higher time frame, and then after you have actually we have actually created that directional bias on the higher time frame, then you can easily drop down into where you are actually trying to execute your trades. And if you observe a trend line, now you need to actually understand, like on the higher time frame, if I'm bullish, I'm expecting to see higher prices. So what you're going to do is to wait for price to sweep that trend line, and then you can look for a buy. Okay, so some of the examples of the trend lines that we can clearly see. Let me show you some of the examples of the trend lines here on our chart here, and on how we can clearly use those trend lines to our advantage. Okay, so see some example here pushing up trend line. You can see a trend line right there. Some form. Okay, another example of a trend line can be observed here. That on this region here, you can see that is a trend line. It's also a trend line. This one here. So we have, you can see that one trend line. These lines here and expect breaking these trend lines. Okay, and moving down. Okay, price didn't respect this area. Okay, let me show you here so that you may easily understand what I'm actually trying to explain here. But the most important thing is to understand that most of the time, more than 90%, the trend lines are not going to work. So you're not going to expect the price to take a certain trend line. That's why it is very important to actually learn how to use these trend lines to your advantage. When people are actually looking for opportunities on trend lines, you are waiting for a liquidity sweep on that trend line, and then you're going to look for your entry point on that particular level. Okay, so like here, and remember what I said about trend lines. The most important thing is to actually understand the higher time frame directional bias. When you know your higher time frame directional bias, it's going to be easy for you to actually look for trades. Okay, it's going to be very easy, very easy for you to look for entries and whatever. Okay, so you can see here, look at this trend line here. We had this trend line, how price was actually respecting these lines here. You can see how price was tapping into this. But what happened here? You can see what happened. Price didn't respect this. Price didn't continue going higher. Instead, price did what? Price broke that level. Okay. Price broke that level, and we can clearly see what happened there. You can see what happened there. Price kept going down aggressively from that level. Price kept going down aggressively, and we saw how price was selling here. But if you check on the previous lines here, price was actually tapping and continue going higher. Even here, price tapped and continue going high. But here, price didn't continue going high. Instead, price kept dropping down, and you can see how this trend and was not respected. Okay. The other example is this. You can see how price was actually disrespecting these levels. Okay. These levels here. From this line, we saw price tap into this second time, third time there. But here, price didn't respect at this level here. We didn't see price respecting this level. Instead, price broke and continued going high. Okay. And what happened again in this level? We had this form of a trend line. Price tapped that for the second time there, third time, first time, but then price here. See what happened? Price reversed and continued going down. So this is how we can say liquidities, how liquidities fail. Okay. Most of the time, liquidities will not actually not work properly. They will actually be disrespected. We will observe liquidity sweep on those areas. Okay. So the most important thing is to understand that first, that liquidities or trend lines are not going to be better places for you to execute. They are going to act as point liquidities or areas of liquidities where price will be swept, where those levels will be swept and price will move opposite direction. Okay. So that's a simple example, okay, on how this trend, you can see even here, how this trend line didn't work, this one also, areas where we had liquidities, where we had this trend line, okay, we saw some sort of easily see, even here, you can see this movement to the downside. That was a movement that swept this, you can see liquidity sweep on this trend line. Again, you can see liquidity sweep on this trend line. That was the liquidity. So price just reversing and disrespecting the trend line, and then you can see what happened. Again, you can see that disrespect. Price has been disrespecting the trend lines. So now you know, like, trend lines are not good points for you to take trades. Now what are you going to do? Now you need to understand. You need to understand what? You need to understand direction bias before you can actually start trading. Okay. Before you can start trading these trend lines and knowing where to actually buy and where to actually sell. Okay, go to the pattern. Let's go to monthly and first understand the direction of bias before you can actually start to look for entries. Okay, so here is our monthly time frame. What we have here is a very aggressive up reference on the left side. Okay, so see this. Okay, now on the weekly time frame. Okay, so on the monthly, check aggressive candle to the upside as quickly direct as we push from this. I'm expecting to see price keeps on being bullish. Okay, that's what I'm expecting here. Okay, so the weekly is also bullish, another bullish arguments. Now we come into a daily time frame, and how we can clearly understand directional bias, like price, like we had this fair value gap here, which was actually back into the similar value gap. Okay, and this source of interest acts as a price after tapping into this. Have this what? We have these two bullish candles, signifying that the bullish candles or the we expect to see price pushing up and taking out something will be bullish, and that is going to be a draw on liquidity. Okay, this is going to be our draw on liquidity. So now on the monthly we are bullish, on the weekly we are bullish, on the daily we are bullish. Now it's easy for us to go into 30 minutes time frame and look on how we can clearly use the understanding of a trend line and the understanding of how liquidity is being taken on the trend line 30 minutes time frame or on the static area, where now we know, like, even on the daily take on this, you can check what you call this trend line. We're supposed to do here. What we are supposed to do are take trades from that region. Or we had this bullish order block, and we formed this small fair value kind of, and what rejection block here. Okay, it's respected again this level and the push shift. Okay, so we formed the market structure shift there, and now we formed again. Okay, where this waited, we had this first touch here. Okay, so we had the first touch. Okay, let me show you here. We had the first touch, second touch, and our expectations was price will keep on. So we had this first touch here. First touch, second touch. Okay, second touch was this one. So we expected price to actually come down to this third touch, and we can clearly buy for those people who trade trend lines. But what happened here is price broke this trend line. Okay, and you can clearly see what happened after price swept to this level. Okay, we had this small indecision candle here, and a lot of people those who trade trend lines may expect the price to go higher here, because we are also bullish even on the higher time frame. But we are not going to actually use trend lines as our areas of taking trades. That's why we are not going to actually execute here just because we are bullish. We're not going to use these trend lines as our area of interest for us to buy. You're going to wait for price to sweep this trend line, and then we can look for our beautiful trade. Okay, now here you can even go into like 15 minutes. Okay, you can go into 15 minutes. Okay, we can go into 15 minutes and actually look at this area, how beautiful this area is. You have seen my examples here. I showed you how we actually use that trend line to execute. Even here you can see how price swept to this trend line and respected this rejection block or this area of interest. You can call it, we can even call this as a demand zone. Okay, so you can go to the 15 minutes. Okay, the 15 minutes will show us a very clear structure here, because now we're in 30 minutes, so I think this area here is not seen very clearly. So now you can see, now you can see, now you can easily see. Okay, now you can easily see this trend line. That's what I was talking about. So we had this trend line. This was our trend line. Okay, and price disrespected this. What are areas or traps where price they take a raise? When you are trading trend lines, you may expect taking you out of the market and then moving on that line. So you can see where this bullish order block there. Price to respect the previous order block was what was mitigated there. So we had the mitigated or mitigated. Okay, so the trend line. Now you can clearly see a very nice pull line. Price forming this sort of a trend line. Okay, not just that, but also we had another one here. Had another one here, some sort of a trend line. Now, what are you going to do? As I say, bullish order block or a nice PD array where you can actually execute or point of you use this and not this one, because this one we didn't at this level we didn't get. We had a clear break of structure there. We expect price to come down into this or higher. But also remember we have this order block down here. Okay, I'm going to use this. Why? Because I can clearly see here we had a nice break of structure here going higher. Okay, and here you see this price created that market structure shift. Okay, very nice. We're going to wait for this management, this region where you can actually take a buy from there. Okay, it's high. Let's see. Okay, is your next drawn liquidity. Our next drawn liquidity was on this high. So wait for price to see what price does there. Swept this. Okay, see, price took us out of the market because of this, because of this trend line here up. Okay, because now we just took this trend line and also pulled out of that and we created see area here. That will be my area for market structure shift. Okay, price to so market structure shift, and then I will look for bullish order block. So we have this. We have this very beautiful. We have this very beautiful area here. Okay. So guys, as I said, we have this nice price action here. To see, we had the market structure shift there at this region, and then what happened? We saw price pushing up there. We had this nice break of this previous high there. So my expectation is to see price coming down into the quick trend line strip. Okay, we saw not market structure. Okay, actually swept. Price took out that string for price to come down into this bullish order block on the discount level, and then you can actually execute from there. Okay, mate. Okay. But I know this is going to be a clean zone now. Now it's an inducement, okay, or a fake point of interest. That is an inducement for me. Okay, that's an inducement 1 to 5. But nice market structure shift, nice formation of this inducement here. Give us that beautiful. Okay, you have just traded from nice this kind of setup. I like that this point here, this bullish order book is a piece of went up price, which is our take profit there. Okay, they are going to the upside. Okay, now I think you have seen how these trend lines can be actually used to increase our win rate. Okay, and how for those traders who use market. Don't forget to subscribe to this YouTube channel, like this video, and comment also. Also, you can share this video to other people. Okay, guys, thank you for your time.